Good, thanks. How are you?
Good, good, good. Had a good weekend?
Good. Yeah, it was a great weekend, except for the weather. I know you're a skier, and you lived in Denver, didn't you?
Yeah, in Boulder, just outside
Oh, or
Denver.
sorry, I know Colorado. I just assumed Denver, but yeah. If you like skiing, there are no mountains where I live, so it's just crappy snow. And at this time of the year, the days are short, and it's cold, and I'm sick of it.
All right.
Yeah.
Fair enough. Fair enough.
Yeah. How
All
about you?
right.
How is the weather in Dubai this time of year?
Very comfortable. Very
Yeah.
comfortable. I'm just outside all the time. It's perfect.
Yeah. What is like in low 30s or high 20s?
With Celsius, yeah, in the
Sorry,
low
I
tw-
don't know Fahrenheit.
yeah, yeah, Celsius for me, yeah, as well. It's the low 20s into the teens even at times at night.
Oh, yeah.
So very
That's comfortable.
comfortable. Yeah, yeah, high 20s in the daytime, maybe into the 30s a little bit.
Yeah.
Comfortable.
Nice.
Yeah,
And
it's good.
July is July just too hot to visit?
Yeah, you can't breathe.
Yeah.
Can't breathe here. And it's too humid as well. Like 70, 80% humidity at 45, 50 degrees Celsius. So it's just not breathable.
Yeah, it's not worth it. Okay. Well, because
Winter.
we're starting to think about something to do this summer, and like I had said, I've always wanted to visit the UAE, but I think it'll have to be another time of the year. My wife is back to teaching, so we can't take the time off like we did last year. We were both off. So
Okay.
anyway, thanks for meeting with me. Just do you mind me asking why do you change platform? Why aren't you on DOS?
Because well, I switched broker, and here's a fun part. When I tried to do futures on DOS, I struggled with the executions when the market was closed, when the New York market was closed. It was strange. It didn't allow me to execute at like 3 a.m. or 2 a.m. or something, and it started
I've
at
had that
4
problem.
a.m. Yeah, something like that. It was weird. I couldn't get my head around it. And to be very simple about it, I didn't need what DOS offers. It's for high-speed execution. I don't need any of that stuff. So, and it was costing me what, $600 a month at the time. That's what my subscription was. There was no point paying that.
Yeah.
And Ninja has its own platform, and that's the broker I'm using. So I might as well figure out this platform.
Yeah.
Not too complicated. So
Okay.
yeah, that's basically it.
Because once I do, I'm planning on doing something very similar to you. I want to master. I'd like to master every market, to be honest with you. I want to master the options, is what I'm doing right now, and that's why I want to meet with you as far as sizing questions. And then futures I've done with small size, but I'd like to get into it more, especially once I have all this, you know, how would I say it, like systemized. If you can have it systemized that it works in different markets, and you know what, I wouldn't mind trying Forex, right? Just to see, because you know what, I like teaching this stuff. The Forex is the only market I have not traded at all, and then you can decide. Do you want to trade securities, equities? You want to trade options, futures, Forex? So, have you traded Forex at all?
Not at all. No, I've done a little bit with the futures, Forex futures, just here in
Yeah.
Ninja, but not seriously in the Forex market. No.
Yeah, I know it's a massive, massive market. As far as liquidity, I don't think, I haven't heard that there's big liquidity problems there. But did you record your massive trade on SPY?
Which one? Where? This here?
The one that you have highlighted in your video there, the 247,000.
Yeah, I believe I do. They should be in the trade reviews playlist in our YouTube.
And when you were trying to get out, were you way above 247 and then you weren't able to get out, or was it on that trade that you figured that you had liquidity problems?
Actually, that one worked out fine. On that day, with that momentum coming into the market, the liquidity, I don't know, something happened, the news happened, or some news happened that made it move. And so there's plenty of activity, and I could get out when I wanted to. I don't remember having a problem with that one. But there were others where it's been complicated. And oddly enough, that one that's highlighted, I remember I did that during a webinar. I was doing a webinar, And we basically ended it. And during the Q&A section of the webinar, when we were doing that, I spotted this opportunity on the chart. So I took it right there, and within the time, we're still within the Q&A, and then completed the trade. It only took like 4 or 5 minutes. So that was
I know, I can tell. And it was probably around more than 3,000 contracts.
Yeah, something. 3 or 4, I don't know, something. Yeah, one of those bigger ones. When the setup was that good, I used to just go in and basically control the risk, though, and use the buying power, but control the risk.
That's part of my question. Do you, would you see the? Can I explain what I've been doing for sizing? I'll share my screen if you don't mind.
Sure.
Let's go with this. I want to go entire screen, and I'll go screen 3, share, and there you go. Okay, so I'll bring what it is I'm looking at. Would you consider this a breakdown and then a slow retest to this level? For it to keep going down? Like, I've got an alert set that if it touches pre-market high here, it could reject hard and come back down.
Yeah. So
sorry, the alert was on Qs.
Okay.
Right?
Yes,
Breakdown, slow retest, and then if it rejects over here, it could put in a long tail wick and reject it hard and come back down. Is that something you would consider?
Yeah, definitely, because you know that there are sellers there.
Yes,
there were sellers there, and you got to just find proof that they are still there. And so if your candlestick setups or whatever indicators you look at show you that the sellers are still there like they were earlier, then yeah, there's a trade.
Yeah,
there's an opportunity. It's a fractal pattern thing, basically. Well, there were sellers there before, so they're likely to still be there until proven otherwise. So that's one way to think about it, and yeah, I would look at it. Yeah.
So I've let me just go over here, and I'll just take a screen. Too much information on here. Snipping tool, new, and this. There you go. So I try to calculate. Let's say I'm looking at this right now. The Qs, the contracts, are the 615 puts. Just to calculate, am I on the right thing? Yeah. So the 615 puts right now are 213, let's say. And I can't bring that window over, unfortunately. I can't bring the options window over. But basically looking at right, they're at the low right now. Let's say the low is 205. So I would put my stop just below 205, maybe 2 or 195. But then the entry, I'd put it probably closer to where it might hit at 259. So I'd put the 259. It'll calculate approximately how many contracts to buy with $100 risk. But that's if it goes down the entire, like if it slowly retraces. And then part of me, what I've been doing or what I did this morning, I actually took that AMD trade, the break and retest AMD this morning. So I took this trade right here, right? I took it long with calls, but I went in as soon as it broke this 5-minute trendy kangaroo is what Naked Trader calls it. As soon as it broke this, it started happening really fast. So, and I did it in sim. But I just went in with large size, right? With, 50 contracts. And as soon as you put it in, if it goes in your direction, then you put the stop at break even. And I'm wondering if that's something that you've ever done, or like, how did you go from trade? And I don't know if you ever traded $100 risk, but how do you go from $100 risk to 1,000 to 5,000 to what you're trading now?
Yeah. So what I did with upsizing my trading was, I think I discussed it before, was I didn't actually upsize the risk to begin with. What I upsized was the size without upsizing risk. I would scale into position. So I'd get in, and then if it goes in my favor, then I can bring the stop in tighter, which allows me to add more size without risking more money, just because I've moved the stop in tighter. So I got familiar with the large position sizes without adding risk, just by trailing the stop and scaling into a position, basically. And then when you have a few winners like that with those big sizes, that's when the account grew. And also my confidence in my ability to manage these bigger sizes grew. And then I figured, all right, let me start upsizing the risk per trade. So that was my sequence, bit by bit. So first, emotionally kind of get used to the larger position sizes without adding risk. The only way to do that is scaling in. And then I continued to scale in. I don't think I ever stopped doing that with options, but I would just initiate with much bigger risk to begin with. Eventually just grow the risk bit by bit by bit. It grew with the account size. And also, again, with my confidence in myself to be able to manage these positions. Because the problem on the winning side of it, the problem with the big positions is you see those P&Ls unusually large and you want to take them off. You want to put it in your pocket. You got to earn your own trust to not do that. So you do that a few times and then you realize how much money you've left on the table. And it hurts. I remember really clearly there was one time when I was in a position and I took it off at $80,000 profit. And that wasn't even at my target. That was just, I chickened out of it because it was too big. It was the first time I'd seen something that big. And if I left it on, it would have been about 200K trade. So, it would have tripled quite literally. And once you see a few of those,
so like this,
psychology. Yeah, there you go. You're taking it off. Yeah.
Right. Well, this, and like I said, full disclosure, this is sim. But even in sim, I'm going, I got to get out of here. It was this was a $5,000 trade, I think.
Yeah.
Right? But and I don't remember how many contracts. Hang on a second. It might have been AMD. It was 30 contracts. So at 30 contracts, I'm just going to my calculator here. So in was at 540, let's say 540. Stop, let's just say that was right underneath, maybe at 520, and it was 30 contracts. At, let's say, 1125 right now, that's a $17,000 trade.
Yeah, solid size. Very
right?
solid.
So, but would I have kept it on all the way over here? I mean, this was the initial target. I took 80% off here. And then as it broke the high here, I partialed out again. And then I just figured I put the stop down at break even, but then just to have it off my eyes, I just took it off. But yeah, basically what you're saying. So what you're saying is that you would have scaled in and you would have waited for, the higher move.
I think to help with what you're doing here, use the range orders in DOS. Put in range orders. At multiple different levels. So as it gets up to that previous high of day, maybe take off 15% of the position, for example. And then set your range orders. You may have 3 or 4 targets. You can stagger them out, and that helps. You may have your major priority target, so put maybe 70% of your position to get out there, and maybe 15 and 15 some other places on the charts that you think may be resistance overhead. And once you do that, especially once you move the stop into break even or better, now you're risk-free and it'll liquidate if it gets there, or you get out at risk-free, or the day closes and somewhere in the middle, no big deal. And we still make some money out of that.
Yeah.
So that's a method I used as well for a long time. Range orders, very easy because you really can step away from it. You can go, you can eat lunch, do whatever. If it takes 2 hours to get there, no big deal. And you're not getting triggered by watching it or watching your P&L.
Yeah.
That's really important.
Part of it for me was also looking at the entire market and seeing that the market is tanking. So why the hell is AMD up 1% and now it's up almost 3%? Right. So part of that psychology is looking at the rest of the market saying, okay, AMD's it's gonna slow down here.
Well, that's you're looking at relative strength, and that's one of the reasons I don't look at relative strength. I just don't like to. It gets me all confused. It creates biases that most of the time I find are not reliable. You see the Qs are going up, but the SPY is not, and you're thinking that the Mag 7's going up, and you're looking at NVIDIA, but NVIDIA's going down, and oh my goodness, it's just, if you want to trade something, look at its own price action. I mean, I even got to a point where I was looking at the options price action, not even the underlying, and started trading that for a little while. That was actually quite effective.
Yeah.
But
Well, I saw that
yeah,
you're like taking. I saw once you were taking a double bottom in a put.
yeah. So
And
basically,
yeah,
yeah. So I've done that. And I think if I was going to trade options again now, I'd probably do it that way, looking at the options underlying, not the underlying, looking at the options price action,
yeah.
and figure it out that way. So yeah, there's many ways to do it, but if anything you're doing brings confusion, then you got to remove it. If you're looking at relative strengths and stuff, and that's bringing confusion, remove it. It confused the hell out of me. I could not rely on that as an indicator. So I'd say remove it.
Okay. And the sizing of it, instead of like, let me bring back this this image. Oh shit, I forgot. Shit, I stopped sharing. My mistake. Entire screen over here. Share. There we go. Let me just get back to this. And so the reason I got into this AMD trade was that it was at it wasn't on the 5 minute, it was on the 1 minute. So on the 1 minute here, once it broke 229 here, I could see it on the tape. It just broke, and you can tell that it was going. So part of me, I think that's what I'm going to try this week, is just going in with a large size, that if it pulls back, I just don't want it to pull back, because this happens so often with options that, I mean, I got in right here. There's a little bit of slippage on the way in, but then it just started ripping. Well, why not just get in larger size, and as soon as it goes in your direction, put the stop near break even, or, almost like calculate your stop afterwards. I know it doesn't sound very professional, but what do you think of that?
Well, the whole point of entering right away like that, you can do that if you're really good at identifying momentum, price momentum. Price is suddenly taking off. So whatever your indicators are to identify extreme aggressive momentum instantaneously.
If you have the L2 for me, the time it sails, I am pretty good at reading the tape and seeing where the price is going to go. So sorry, you were saying that if I have that indicator, then it's okay to do it.
If you can reliably do it, put on the full risk, and basically your stop is if the momentum stalls quickly, you just get out of it. Ideally, which means most of the time your stop is below your entry candle, right about there. So it's very tight anyway. And that's it. You're riding momentum. It's a momentum,
and it's very similar to what I've seen you do. I mean, you'll get out of a position when you see it so that it's not going in the direction. Where as opposed to like a Thor, he'll leave his stop above some Camarilla level, and he'll leave it there, all day long.
Yep. See, with options, you can't afford to just leave it there like that. Especially if you're doing 0 DTE, because of time decay, then liquidity and all these problems. So you got to actively watch it and de-risk aggressively. But yeah, if you're getting in with momentum, we know with options, if momentum's coming in, then options, the value just jumps tremendously quickly. All the theta and all those other things. So it's one way to go with options. Yeah, I've done it plenty. Trying to use the 1 minute chart to identify momentum and take a momentum entry. At least that way, most of the time, the position is already in your favor. It never really tests your full stop loss most of the time. And then it's a matter of managing profits.
Yeah.
So it's a good way to go. Again, I think the central part of it is being able to identify momentum as it happens in real time, if you're able to. Now, I do it by watching a 1 minute candlestick. I can really watch it closely and identify those kinds of situations. So you gotta basically, again, develop that skill if you're able to do it. You said you got the tape and the level 2 to do it, then great. You can do it with that.
And this is all I've got on my chart as well. I mean, I've got pre-market low, pre-market high, yesterday high, and yesterday low. That's the only thing. These other levels are just major daily levels that I've had on there before. And then I'll put on measured moves for profit taking. Like I'll put on the measured moves for, something like this, the 1 minute. And the 1 minute, I think I've shown it to you before. It's incredible how it works very, very similarly to that wiki candle we used to get in DOS. And so for targeting, I mean, there's the one and there's the other. I mean, we're almost right at it.
Yep.
So, but you would say that I think I'm reading it pretty well. I mean, this was the breakout right at the open. It went up to PDC and then pulled back right up to this range here, and then two green candles. They're not bullish, but two green candles. But then, like I said, right on here, you could tell that the 229 was just breaking and it just took off. So you would say that was properly managed?
Yeah, I think the momentum entry is there, as we're discussing. So finding that ideal entry with the stop in the right place, as in pretty close to the entry, just below the 1 minute candle.
Yeah.
And then also looking at the RVR side of it, I think the RVR is there. It looks like it'll be about 3-to-1 up to the high of day.
Yeah. Over here was 3-to-1. Yeah.
Yeah.
Okay.
That's right. It has all the elements you need to control your risk and maximize your profits.
Okay. All right, and I think I'm going to try to perfect this and grow the account a bit, and then I think I'm going to follow you back into futures, because the time decay on this, you can't walk away from it. That's what annoys me about options. Yeah, I can't just leave a range order there, because if I put my stop below a level, well, it'll take me out before it gets to that level on the equities.
Yeah, it's really tricky. So that's where the only way I've gone around it is reading the options price action. So for 0 DTE specifically, basically all contracts are going down in value when it gaps down when it opens. So you're seeing this price action go down. Now, when it's going down, you want to go long options. You want to wait for reversal. So you see something like a big double bottom on the options 1 minute chart. And then the price with momentum continues with that double bottom and goes, in a bullish options contract. And so you can enter with that. And then your stop is below that double bottom. And the targets that I used in those situations are on the options 30-minute chart, just looking at overhead resistance, which, you'd find plenty of them. I used to have 3 or 4 levels where I'd stagger out profits. It's one way to go. It's interesting. I've done it a few times. I didn't stick with it because I was just moving away from options anyway. But that's the only way I know that you can maybe step away from the options contracts. And I had a couple of really good trades. I think one $300,000 trade, another $250 that were done with this method. So it's a good way to go. It works. Again, if you want to explore it. It has a few different odd elements to it, but
yeah, I just brought up the 30-minute chart on the options, the AMD options contract, and it's actually very interesting. It reversed right at the high of last Friday.
There you go. So you can look at that on a 30-minute options chart. You'll find lots of areas of resistance, very good places to target. But you got to identify when is it done going down, the options value done going down. And again, candlestick patterns is what I look at for that. And it gets very interesting. I mean, you can get faked out a lot, but
yeah,
the potential reward side of it is tremendous. It's amazing how far this can go.
Were you ever at $100 risk, or did you start with much higher?
I started with $50 risk when I first started trading back in 2019 when I first went live with day trading. It's $50 risk and blew up a few accounts with that.
Yeah,
built up slowly after that. Yeah. You grow into it.
And was it? Do you mind me asking? Like, what was the number that you went from, let's say, 200 to 1,000 or 2,000 or whatever? Like, was there something that
I think
itself that you went really big?
Yeah, I was. Let me think. It was always risking a few $100s at a time. Growing it $100, $200, $300 risk per trade. I was doing that for the first probably the first year, I think. But then through a good little winning streak, if I remember correctly, I had the confidence to let me see if I can risk 4 figures on a trade. let's risk $1,000 on a trade. And I had a good little run doing that. At the time, again, I was still scalping the open, trading all that stuff, just equities, no options or anything like that. And so that was working out. And yeah, I did have losing streaks along with that as well. But then, you know, I was always curious well, even before trading, I was always curious about capital efficiency. So as the account starts to grow a little bit, I'm thinking, do I really need to keep all this cash in the account just so I can put on a bigger risk? There's got to be a more efficient way of doing this, more leverage, basically. And so I discovered options. Well, I always knew about options, but I started to really dig into it. And it's when I got into options that everything got a lot bigger. Going from risking $2,000 a trade, you know, suddenly I started risking $10,000 a trade, almost accidentally at one point. 1 or 2 trades I think I took them and like, oh crap, why is it so big? I didn't understand really how big each contract is. It controls 100 shares. But anyways, it's just started understanding leverage and capital efficiency. I guess that's when my mind really switched on, and realizing that there's one thing is the leverage is enormous. And so I don't have to have a lot of capital. I can put on $5,000 or $10,000 of risk without having to have a $500,000 account. And also on the reward side with options, if you're getting into a momentum situation and you're out of the money, holy crap, what would normally be a 3-to-1 reward becomes 10-to-1 quickly.
Yeah.
Because of the gamma and all that. So then my appetite really grew for risk and reward, just massive, because I saw the potential of it with the options. And so I just started pushing options. That was in early 24 when I really started getting into options. Very early, I think late 23 even. And just pushed it as far as I could. Then you saw I hit liquidity problems even with Apple and Tesla and the most heavily traded options. So I had to go to the SPY, and even with the SPY, then I hit liquidity problems with had to go to 0 DTE, and even there, then eventually I hit liquidity problems because it got to a point where I would risk $50,000 or $70,000 on a single trade, and liquidity really became a problem. You know, taking 5,000 contracts on SPY is still, you know, it's not trading 5,000 contracts. I mean, it's just not. So now I'm here with the futures market, but really I think it was just the potential of the options market. Once I started to really feel that, then my appetite grew tremendously. And really, I realized I can do this, and I don't have to have $1 million account. I've never traded with $1 million account. You know, the biggest I ever traded with was $500,000, and I never let it get bigger than that. So, and mostly I would actually keep my account at $100,000 or $200,000 when I traded those options contracts. And yeah, so for me, it was just about just seeing the potential that's available in the market. It's ridiculous. It's outrageous. I think it's kind of silly to just trade equities, you know, especially once you have a good grip on risk. It's really silly. I mean, you can do so much more with your money. You can, as you were doing the investment, you can put so much of that money away to invest. And you don't need a massive day trading account if you learn how to use it properly and interact with the market the right way. So, I mean, options is great. I think I have it in my back pocket. I know what to do with it or how to do it. But I'm just trying to see here if the futures market offers me something even bigger. If it does, great. If it doesn't, no big deal. I'll just go back to the options world and I'll have to do that.
Yeah. Have you ever thought of putting the Camarilla levels on your on the futures?
I haven't done it with the futures. I experimented with the cam levels in the past with all kinds of tickers, and I couldn't understand it.
Yeah.
It never made sense to me, so I didn't. You know, I just have my own way of finding levels.
Yeah, oh, yeah, it's not a necessity. Absolutely. It's just that they are very. They can be very telling. The levels can be very telling. You know, you're not going to really, you know, buy underneath when it's under S6. But then again, I mean, the Qs and SPY, both of them opened under S6 today, and they're buying. Right?
There you go.
Who knows? So anyway, okay. Thanks for your time, Avi. I appreciate it.